Hello, everyone, and welcome to our next technical analysis review for the Euro US dollar pair. Today is July 10th, 2014, and we are currently looking at price action on the 15-minute chart. As you can see, this yellow vertical line divides yesterday's trading session from today's trading session. And as you can see, for the past two trading sessions, there's been a surge in volatility compared to how things were prior to Wednesday, which was yesterday's trading session. And of course, on yesterday, we had the release of the June FOMC minutes that indicated the Fed's plans to end tapering or to complete their tapering of their asset purchasing program by October. So then, of course, that was mentioned in the minutes, but they also plan to keep interest rates low for an extended period of time, even after the end of tapering. So this report was pretty dovish, and it just shows that they're going to maintain their accommodative monetary policy or monetary stance. And then we saw U.S. dollar weakness across a basket of different currencies. Right now, we're looking at the Euro-U.S. dollar pair, and we saw this dollar weakness kick in and this short squeeze rally in Euro-U.S. dollar on yesterday, which caused the pair to touch a 1 week high around 36.50 or 36.51 for today. But of course, we saw this dollar weakness kick in. But if you look at today, something completely different happened. Of course, the trading landscape is different, and we saw reverse in sentiment, and the common currency fell from the session high here at around 36.51 all the way down to the session low at 35.89 for about 62 pips. So then, of course, all of the gains that were acquired during the FOMC minutes on yesterday, they were lost on today, and we saw those gains erased due to risk aversion or flight to safety into the greenback as a result of some disturbing news that came out earlier in today's trading session, primarily from the Eurozone. So then earlier in the European trading session, we had a slew of disappointing industrial production numbers that did come out. We had some numbers being reported from France, Italy, and Greece, and I think we had one more, but I can't quite remember. But these numbers disappointed to the downside and came in much weaker than expected, and it allows us, it really indicates that the recovery in the Eurozone is not as strong as we would hope. And the industrial production numbers came in very poorly, which initiated this fall or this slide lower in the euro. But this news was not really the news that aided in bringing the common currency lower. It helped to bring it lower, but of course, the major news was really some, the turmoil surrounding the Portuguese bank, Espirito Santo, and the insolvency issues with them that they're experiencing. And there's some unpaid debt and missed payments on commercial debt that is causing investors to short their stocks. So then we saw heavy selling within the Portugal index and also just in global equities in general, since Moody's did downgrade their rating on today. So then we saw some heavy selling. They had to actually stop all of the selling of their stocks and their bonds for this particular, company. So then really, what we're seeing here is just really investors' fears that some of the issues that occurred back in, during the Eurozone sovereign debt crisis, and even with the whole insolvency of banks, they're not quite yet over. Like, we're still dealing with those issues, dealing with banks being insolvent and the whole sovereign debt crisis. So then, of course, this is sort of like a repeat of 2012, if you was around, with the Spanish bank, Bankia, and even with their, their toxic debt on their balance sheet and how they needed some type of a bailout. Well, there's some concerns that this Portuguese bank may need some type of sovereign assistance as well, and possible help from the ECB. So this is what created the 62 pip slide in the pair. And a lot of this heavy selling was really influenced by selling in the euro yen. There were safe haven flows in the euro yen that helped to pull the euro US dollar pair low as well. So then price right now is currently above the 3600 handle. It's a few pips above that, and it's consolidating, at the moment. So then if price, let's say price continues to fall, and let's say it breaks below today's low at 35.89. Now, if that happens, then we can expect price to make its way down to our next approaching support, which is at 35.76 or 35.75 area, which is actually our Monday's low. This is the low from Monday. So then if price breaks below 35.89, then we can expect to find strong support at 35.76. And if price breaks below this level, then we can expect some stops to be triggered and for price to make its way down to 35, like 36 or 37, which is really the June 16th low. Really, this zone between 35.40 and 35.60. I mean 35.36. We can expect the price to find some support here, and this is around our June 16th low. So those are the next approaching support levels if this move continues, or if we continue to see weakness or selling in the Euro US dollar pair. Now let's say price decides to further correct, or let's say decides to go higher and retrace some of the losses from earlier today. Well, the next approaching resistance will be around the 36.22 area. This area between our 200 and simple moving average, our 200 and 100 simple moving average lines right here around 36.22. But let me go to our 3-hour chart and draw in a Fibonacci retracement, because I think we could see some levels there. Let's see, Fibonacci retracement. So we can go from the high here at 3,700. This is our July 1st high, all the way down to the low here on June 12th at 35.12. So then, let's see. So then, let me go back to 15-minute chart. So you can see here that if price, comes up to these levels, we still have this resistance up here at the 38.2% Fibonacci retracement level at 36.29. So then really this whole zone, this whole range between 36.22 and 36.29 will be an area where we can see offers positioned, and this may be an area of resistance here. So then if price breaks above this zone here, then we can expect some stops to be triggered and for price to make its way back up to the session high at 36.51 and find resistance there. But yeah, that's pretty much what we can expect right now. We're sort of like above the 3600 level, waiting some type of breakout or some type of news during the Asian trading session. So then that's pretty much it for my technical analysis review. Of course, I'm going to remain bearish on this pair, considering all of the news that came out, from today. And we may continue to see some selling, but before then, we still have room to go to, before we see a continuation of the slide lower. But that's pretty much it for my technical analysis review for today, and I'll talk to you later. Okay, bye.